Well, it's been a tough year for Hollywood. Domestic box office receipts are off 6% from a year ago, and total attendance is down 10%. But today, Steven Spielberg's long-awaited $200 million War of the Worlds invades theaters, and not even the recent couch-jumping antics of the star and love-struck psychotherapist Tom Cruise may be enough to help the movie turn a profit. For more now on the state of the movie business, here is Lance Gordon, President and CEO of Gordon Venture Holdings. Mr. Gordon, welcome.
Good afternoon.
Thank you.
Is Hollywood more risk-averse today than it used to be? Are they less inclined to take those $200 million bets?
Well, I would say that they are definitely less risk-averse, but...
less risk-averse or more?
Less risk-averse.
They want to take bigger risks.
They're taking bigger risk in terms of what they're spending, but they are offloading some of the risk to more private equity type of sources of funding for the production side of their equation.
And that's basically what you do. You help put together investors, partners, big money, and the studios through the investment banks, I guess.
That's right. I maintain relationships with a select group of investment banks that are working very closely with major motion picture studios, where the studios are looking for a source of financing to help offset expenses for the production side of the equation for portfolios of films.
So they want to take the big risks. They just don't want to. They just don't either have enough capital to do it all themselves, or they don't want the full capital risk to be theirs, right?
That's correct on the latter. Typically, the major motion picture studios are producing anywhere from 24 to 28 films per year, and they're looking now to try and increase the number of films that they're actually putting out on an annualized basis by, say, 4 to 6 films per year by entering into these private equity type of sourcing relationships.
Now we focus perhaps superficially on domestic box office. It's one measure. But is domestic box office as important to the studio's finances as it used to be?
No, it's not. In fact, oftentimes many people now believe that the major motion picture studios are looking at the domestic release for a given film as a marketing tactic to drive revenue streams from what they call the ancillary revenue streams, which might include things like DVD sales, merchandising revenue, cable production, cable airing of films that have been produced in the past as well.
Which studio is the strongest right now?
We like 20th Century Fox, and we like studios that, at least for the next 2 to 3 years, are...
Why is that?
Studios that are making a conscious effort to actually produce and distribute more family-oriented films. There's been sort of a backlash, if you will, against the rated R genre. There's a fair amount of demand for PG-13 films or less, and in particular, of course, the animation space has been widely successful over the last 3 to 5 years and is expected to continue to be successful from a revenue standpoint for the next 2 to 3 years. Studios that are playing in those types of genres are of interest to us.
Is the straight-to-DVD market a much bigger part of the financial equation now?
Yeah, typically the studios, you know, from a contribution revenue and contribution margin standpoint, DVD sales in particular is where a lot of the money is being made right now. So oftentimes studios will look at a domestic release where you might not necessarily break even based on the domestic results, but you'll actually make your money and then become profitable based on international releases, DVD sales, so on and so forth.
Maybe I betray my own sort of singular bias or disinterest here, but it seems like this year there haven't been any must-see movies really aimed at adults. Why is that? Well,
I don't know. It all is in the eyes of the beholder. Everyone has a different taste and a different range of interest for film, but I'm a father of 3 kids under the age of 5, and it seems like every weekend we're going to see a rated G animation film. And I actually feel like those films are being targeted to me as well as my children. So it just depends, I guess, on the individual and what their interests are.
Yeah, I mean, I guess the only one that has sort of broken through would be Cinderella Man, but its box office has been, you know, okay, but not huge.
Well, again, you know, I'll give you an example. From 2001 through 2004, the worldwide domestic box office revenue has gone from 17 billion to 25 billion in '04. And in particular, from 2003 to 2004, there's been a $20 billion growth up through 25 billion for that period of time, where over 50% of that growth came from the Asia-Pacific marketplace as well as Europe. So domestic box office results, as I said earlier, are not really as important as they are a marketing tactic, if you will, to drive the more profitable revenue streams that come from the other ancillary areas.
Lance Gordon, thanks very much. Lance Gordon of Gordon Venture Holdings in San Francisco. There are 15 minutes of trading time left. 23 points lower we are on the Dow. NASDAQ off a point.
Next up, digging into natural resources.